Good day. Our smart beta funds aim to outperform the capped Swix equity benchmark over the medium term by following distinct investment styles. The 1.9 billion Momentum Trending Equity Fund is specifically designed to pick up winners. We achieve this by identifying upward trends in stock prices and exploit these to outperform. However, trends sometimes disappear during turbulent times. We often experience this over the past 3 years due to the COVID crisis, the start of the Ukraine war, and the more recent increase in load shedding. But over the last quarter, trends started to reappear. The fund delivered a return of 2.2%, which was 1% ahead of its benchmark and which earned it a top quartile ranking. Despite the earlier mentioned supply-side shocks, the fund delivered a return of 9.8% over the 5 years to June 23, beating its capped Swix benchmark by 2.9% per annum, putting the fund in the first quartile over this period. This means R100 invested 5 years ago in the Momentum Trending Equity Fund would now be worth R160. R100 invested in the average peer would now only be worth R143, and had performance been in line with the index, the original R100 would now be worth only R140. With investors still fairly risk-averse, the 1 billion Momentum Value Equity Fund was down 0.2% against the 1.2% of its benchmark over the last quarter. As cheap stocks became cheaper, the fund now offers more value and should do well once share prices again start moving towards their fair values. While the fund is experiencing a cyclical lag against the benchmark, it weathered the macroeconomic supply-side shocks of the last 3 years better than most, and it is ranked top quartile over both the 3 and 5 year periods to June 2023. R100 invested 5 years ago in this fund would now be worth R155. However, had returns been in line with that of the average peer, the same investment would now have been worth only R143. And if returns were in line with that of the benchmark, it would now have been worth only R140. The Momentum Quality Equity Fund was launched in August 2021 and invests in companies that are well managed. Since the launch of the fund, share prices were largely driven by the earlier mentioned supply-side challenges, and in this environment, quality companies got neglected. The fund was up 0.9% over the June quarter. While this was 0.3% behind the benchmark, it was still sufficient to put it within the second quartile of its general equity fund peers. The fund lags its benchmark over the last year, which was a challenging time in the market for all funds that follow similar strategies. However, history has shown that backing well-managed companies is a sure way to achieve one's investment goals over the longer investment horizons. Let us conclude by looking at the local equity market as a whole. Yes, there are risks. However, these risks seem to be more than priced in. With the price-earnings ratio of the equity market at levels last seen during the global financial crisis, it only requires a fraction of the negativity to disappear to cause a strong market recovery. And our smart beta offerings, some of which already have stellar 5-year track records, are excellent vehicles to participate in this upside potential. Till next quarter.